Markets just popped on Trump's tariff pause with the EU, but is this the real continuation or could it be just a fake out? In this video I will lay out the exact confluences I'm watching and show you how I'm positioning for what comes next. If you find value in these videos, hit the like button and subscribe so you never miss out on any future updates like this. Now let's dive in. Starting off with a post I made on my X account, I highlighted that I was expecting something like this to play out, which implied basically a new all-time high, then a reversal back to the downside, followed by a continuation to the upside. Now, the point is, and this is also what I highlighted in this post, is that we'll have max fuckery, meaning that we'll have tons of liquidations, we'll have tons of people getting flushed out of the market, getting shaken out, getting sidelined for the next move up. Remember, market makers always want the retail to be on the wrong side of the trade. Therefore, they'll use every tool at their disposal to do that. I also expect that in the coming months, as we near the cycle top, we'll have an increased volatility. So in this video, we'll discuss exactly that, and I'll also share with you my perspectives moving forward. So now let's move on back to the charts and see how this played out. Moving to the charts, we see that low timeframes have been somewhat choppy, and Bitcoin's price hasn't really been doing much over the last couple of days. Therefore, not a lot of updates to be made, but I think that a lot of people are too zoomed in right now on the charts. A lot of people are tracking this range, are saying that we could have a major move to the upside from these levels, or that we could have a deeper pullback, so something similar to this before any potential continuation back to the upside. And the point is, both have a good argument in saying that this could be an accumulation phase similar to the one that has preceded each of the impulses up so far. So we see here that instead of having a substantial pullback along the way, when we were going up since early April, we've seen these shallow consolidation phases that have preceded each of the moves up so far. So bulls have a good argument in saying that we could be repeating what we've done over the last couple of weeks. Bears have a good argument in saying that there are some clear bearish confluences formed on the charts. There are also some bullish confluences on the USDT dominance, as I covered in one of my latest videos, which you can check out here. Therefore, both sides have a good argument in saying that we could be having a short-term move to the upside or a short-term pullback from these levels. So I think that no side will win. And what I mean by that is exactly what I highlighted in that post on X. Both sides will get wrecked before there is any real move moving forward. Now, interestingly enough, even though the price hasn't really moved over the last couple of days, we've seen tons and tons of liquidations in the leveraged positions as investors are getting impatient. And as we've seen in the latest narrative around James Wynn, he is trading this range like most other retail investors are. He is gambling in this range with extreme leverage and not making any money, but losing it. Because market makers in these ranges want to shake out or flush leveraged positions. That's the end goal of these consolidation phases. They get liquidity for the next phase up, whether it's down or whether it's up. These ranges have the role to shake out leveraged investors. Let's talk about why we've seen consolidation phases along the way and why instead of seeing substantial pullbacks when we were going up like this, we've seen instead these shallow chops before the next impulse to the upside. I believe it all comes down to liquidity. And I've covered this many times before, like I've done back in February and March and April. This is a thesis I've covered then around liquidity. At that time, I was covering how market makers were using this phase to accumulate and how they were using liquidity traps and liquidation cascades to create an artificial counterparty. And the main thesis was something like this. We had a series of untapped lows that developed on the lower time frames, and we can clearly see how they developed. We have these untapped lows that build up over time. And then, interestingly enough, right at the top, we've had some sort of bearish news that always came out. It was around tariffs, mostly. Each time there has been a liquidation cascade, it has been triggered by a tariff announcement. As you guys can see here, it happened both on 21st of February, it happened on 6th of March, and it also happened on 25th of March. So this is a thesis I've covered many times before. Then after we've bottomed back in early April, we've bounced. The main takeaway here is how this reversal has developed, how we've constructed the price action over the last couple of weeks. That's the real interesting part. But I feel like I cannot emphasize enough how important this is right now for the markets. And a lot of people seem to be overlooking it. So the more people are going to overlook this thesis the more I'm going to cover, as I know how important it will be for the markets moving forward, and I'll explain in just a few minutes why. After a lot of people have capitulated back in early April and all throughout March, then we've bottomed out and we had this first bounce. What's interesting to note is that after we've had this first bounce, instead of seeing a deeper pullback, something similar to this, before eventually another impulse to the upside, we've seen this consolidation phase that has led to this impulse up. And then we have seen this once again playing out. This consolidation phase that has led to this impulse up. Once again, this consolidation phase that has led to this impulse up. And as I said earlier, a lot of bulls currently seem to be highlighting this to be in play right now, and for this consolidation phase to precede the next move to the upside. But why is this so important, and how it will impact Bitcoin's price moving forward? I believe that everything comes down to liquidity. Market makers had liquidity to accumulate here as everyone was capitulating. They also used all of those liquidity traps, therefore they had the liquidity to accumulate along the way. Now it seems like they do not want sideliners to entry back lower because they want them to buy at the top. And we've seen something very similar to this happening once again in October that has preceded this major move on Bitcoin that we've seen back in November. Now, I don't know what the exact time frame for this blow off top phase will be, but I believe it will come eventually. I believe that we're in a similar phase to the one we've been here, where a lot of people want to buy back after they sold, want to add exposure to Bitcoin, but they don't have the pullbacks to do so. This is also why I think we didn't see substantial pullbacks along the way, because market makers will want liquidity to distribute at the top. So when we'll have this blow off top phase, that will bring a whole lot of euphoria, and everyone who is currently sidelined will eventually capitulate on waiting. And that's when they'll start foaming back in. But at that point, as we've seen back in November, here a lot of people start to buy back in. The bears have acknowledged that they were wrong, but at that point, unfortunately, it was too late for them. At that point, we were already in a distribution phase. Market makers were selling, and as we see here, this phase has preceded this continuation of the distribution, followed by this next accumulation point. However, the market sentiment plays a major role right now for Bitcoin moving forward, because if we see a pullback in the coming days, then it must come with a bearish narrative, and that I think could come from a lot of sources. Today we have the FOMC minutes, we also have Nvidia's earnings report coming out after hours, so there are a lot of narratives that could emerge which would justify a correction on the markets. Therefore, I think that if we are to see a pullback on Bitcoin in the coming days, it will come with bearish narratives, and it will serve as a very strong bear trap for the bears. Moving forward, I expect that in the coming days, our next place to see a reversal from will be this resistance line, which has acted as a reversal point in the past. We see here back in December, and in January, it has preceded these two crashes on Bitcoin, and I think that this resistance is likely to put in a new local high here once we test it, before we could potentially have this correction and the next move to the upside. Remember that market makers always want retail to be uncertain and always want retail to be on the wrong side of the trend. So if we are going to see any sort of continuation to the upside, I think that we need to see a cool off first. We need to see a correction that would make a lot of people flip bearish once again, say that this is a triple top, or that this has been the macro top for this cycle, in saying that we could be in a similar phase to the one we've seen back in late 2021, when Bitcoin rallied to $69,000 before eventually entering a bear market. Adding some technical confluences to this, we see that currently we're forming some nasty bearish divergences on the technical indicators. While the price is forming higher highs, the technical indicators are forming lower highs, suggesting that this move to the upside might be weakening. Now this, in correlation with other confluences I've presented in past videos, such as the USDT dominance testing an important support range, or the on-chain data and how it developed, and fresh longs that have been piling in over the last couple of days, as reflected in the elevated open interest and funding rates being relatively high on the low time frames, I think is an indication that we may be having this pullback. Now, once again, I think that if we are going to see this pullback, it will act as a healthy flush of late longs that have been piling in over the last couple of days, and will precede, in fact, the next move higher. The last time we've seen bearish confluences forming was all the way back in November. And we see here that we were around these levels. We eventually went on higher for a couple of more days before we eventually topped out and then start off this downtrend. So I believe that a reasonable approach right now would be to take some profits, and that's what I've done over the last couple of days. I've been very transparent about it after accumulating all throughout March and all throughout April, after publicly announcing that I had lowest cash positions. I had nothing else to buy with, and I will continue to be transparent with you guys on what my next strategy will be. Could I miss out on some gains? Could I be wrong? Certainly. But one thing that I'm not going to be is dishonest. When you follow me, you should expect full transparency regarding my strategy and my positioning, and I will always bring my reasoning and my thought process to it. So you can take the information I present here and you can correlate it with your own analysis. I believe that the hardest part of investing is trying to nail bottom or nail a top. A lot of investors try to do that, thinking that if you're not nailing the bottom or nailing the top, you're a bad investor. Well, no, because throughout all this move, you have been on the right side of the trend, and that's what matters. For the majority of the time you spend in the markets, to be on the right side of the trend. It doesn't matter to buy right at the bottom or to sell right at the top. You never know when an asset is going to bottom out or top out. The only things you can really do in the markets are to adapt yourself to new market circumstances, to be flexible with your strategy, to have a plan that you stick to, and most importantly, to have a conservative approach on the markets. A lot of people fail to do that, therefore a lot of people lose money in the markets. A lot of people want to overexpose themselves to leverage or to very risky investments to try to chase those gains. What I've learned is whenever you do that, you tend to become emotional, and that's something that you want to avoid as it leads to mistakes. Now, what I also want to add is that this decision to de-risk will have, most importantly, a psychological impact on me, as it will allow me to remain level-headed and keep an objective approach over my strategy and plan in the coming weeks. By being overexposed to the markets here, you may consider it as a mistake. Personally, I considered it as a calculated risk. There were a lot of bullish confluences that have formed at that point. The market sentiment was in extreme fear territories, therefore I made the decision to invest all of my capital. It could have ended very bad, and the prices could have kept on going lower, but I made a calculated risk to reduce my cash exposure almost to zero. Now, because the prices have gone a lot higher since, and because the risk of being invested in the markets is higher, now I'm not willing to take that risk anymore to be fully invested in the markets. Therefore, I made the decision to de-risk and increase my cash positions to prepare myself for any potential scenario that could take place in the coming days. Because as we all know, low time frames are very hard to predict, so we want to stay ready for multiple scenarios to take place, especially in these volatile times. So that being said, these are my thoughts on Bitcoin for the moment, and I'll keep you guys updated once there are additional confluences in the coming days. This has been the video for today. If you've enjoyed it, don't forget to give it a thumbs up and make sure you're subscribed to the channel so you never miss out on future updates like this. Thank you all for watching, and I'll see you guys in the next one.